Imagine if your money could work harder than you do. What if you truly understood how Wall Street, the Federal Reserve, and your own bank account are all connected? In the next 13 minutes, I'm going to break down the entire US financial system in the simplest way possible. Stay with me till the end, because this might completely change how you think about money. Let's dive in. Let's start from the beginning. Alexander Hamilton created America's first bank back in 1791. Then came the terrible crash of 1929, which led to the Great Depression. That crisis forced big changes, like FDIC insurance and the SEC. After World War II, the US dollar became the most powerful currency in the world. Now let's talk about the most powerful player in American finance, the Federal Reserve, or simply the Fed. They control interest rates. When they raise rates, borrowing becomes more expensive. When they lower them, the economy gets a boost. Their decisions affect your mortgage, your credit card, and even the price of everyday things like groceries. Every single day, we interact with banks. They keep our money safe and lend it to others. Thanks to FDIC, your deposits are protected up to $250,000. But here's the truth. Your credit score decides how expensive your loans and credit cards will actually be. Good credit saves you thousands. Bad credit costs you a lot. Wall Street isn't just a street. It's where American dreams get funded. Companies come here to sell shares and raise billions of dollars. The S&P 500 tracks the performance of America's biggest companies. For many decades, the stock market has been one of the most powerful ways ordinary Americans have built real wealth. The US government borrows money by selling treasury bonds. These are considered among the safest investments on the planet. But right now, in 2026, America's national debt has crossed $36 trillion. That money funds roads, defense, social security, and more. But such a huge number also raises serious concerns for the future. Now, let's bring it home to your own money. The simplest rule to follow is the 50-30-20 budget. 50% on needs, 30% on wants, and 20% for savings and paying off debt. Build an emergency fund, and then let the magic of compound interest do the heavy lifting for your future. Want your money to grow? Index funds are one of the easiest and smartest ways to invest in the entire market. Start as early as possible, spread your risk, keep your costs low, and most importantly, be patient. The people who win are the ones who stay in the game. But let's be honest, it's not all perfect. Student debt, high housing costs, and inequality are real struggles for many Americans. At the same time, fintech and new technologies are changing how we handle money. The future will belong to those who keep learning and adapting. So, now you understand the basics of how US finance actually works. Small actions today can lead to big results tomorrow. Take a look at your budget this week, start that investment account, and subscribe to US Finance Simplified for more easy to understand videos. Thank you so much for watching. Now go make your money work for you.